Boom! How's it going? How's it going? It is I, TJ, and today we are going to be talking about something that I enjoy talking about, and which is cash flow versus appreciation. Yeah, we've been having lots and lots of talks about this in my community, and some of my newbie investors are like, TJ, how do we actually start investing? Do we invest for appreciation, capital gains? So is buying flips, so should I buy and sell, or should I just be buying properties that are kind of like on a cash cow and they're giving me a whole lot of income, right? That's the question. That's the question. Then it brought me to a thinking of, hey, why am I buying the way I'm buying? So for instance, a lot of people, they are buying this, or should I say they are heavily investing in properties, because we've all heard, or we all know that property is one of those other assets that can get you to be rich. So the goal is to be getting rich, isn't it? So you got this whole big assets, this whole big balance sheet that you do have, and we're all wanting to get rich, right? But so what's more important? Is it the cash flow that we need to be buying for? Is it more of the appreciation that we need to be buying for? Well, on this video, we're going to be talking about all about it and see exactly which method actually makes sense. Is it the cash flow or is it the appreciation? Here's my thinking. My thinking is that let's start from talking about what is cash flow, right? Some other people have also gone on to ask me, TJ, can we actually find properties that cash flow in South Africa right now or wherever you are? The point is that, yes, you can. You just need to be trained. Your eyes need to be trained to figure out where do you find those properties. Are they the grade A's, within the elites? Is this where you find properties that cash flow? Maybe not. But yes, you can still find them, right? So the thing here is that when you're buying for cash flow, or should we say why you're buying for cash flow, is that number one, for me particularly, is that cash flow allows you to get kind of like, if you were in a tight spot, or maybe you were just being an employee, and maybe you just had X amount of income, and if you're working, or if I say you're buying for cash flow predominantly right now, you're buying predominantly for cash flow, and you have found those properties for cash that are cash flowing very well. They are cash flowing, they're cash flowing, they're cash flowing. So you're getting these cash cows that they are. Is it going to get you rich? Not necessarily so, but yes, it can get you rich, but it takes you a bit of a longer time, because all you have is you're now having an income that is now an income statement that is now very rich. You've got an income, you get an income statement that's very rich. But what it does is, people always talk about, cash is king. What it also does is that it gives you liquid. You are consistently liquid because you got cash cow, so you got cash available to you. So let's assume that you are chasing to be buying some of the properties cash. So which means that if you are cash flowing, potentially, yes, you're not taking money out of your pocket. You're bringing in money in your pocket all the time. So which means that if you are stuck at a job, maybe, I'm not saying that being at a job is being stuck, but potentially it could be for some of us. And if you are there, in no time you are able to actually leave your employer, because the cash flow can actually replace your income from your employer. So that's like the big one, right? For me, that's like the big one, right? The second one is that with this cash flow that you have, you're always liquid. So you can find other things to do with your money. You can find other things to do with your money. You can potentially put it in a little bit more return, because we all know cash is king. Whoever who's got the cash, they've got a little bit of some money and some advantages, right? The second thing is that now you've got this good income statement that you've got. The good income statement is each time you go to the bank and the bank sees you, well, potentially they think that you're in a good space, so you've got a bigger income that you're getting in your business, and potentially, that can also get you to be borrowing some more because your income is solid, right? However, let's look at it on the other side, where you are actually just buying for appreciation, right? The question that I've also seen is that people that buy for appreciation predominantly, from a month to month, actually what now happens is that they are losing money. They are losing money. So which means that, yes, they have found a property in a good area, but it's not cash flowing. And the argument that they put on the table is that I'm buying for appreciation. So 5 years later to come, I'm going to make more money. Can I double up? Well, I haven't really seen properties that double up in South Africa, but potentially they are there. Who knows? But in some other cities across the world, maybe, actually, even though I'm going to retract my statement and say, I have seen that have doubled up over like a 10, 20-year period, right? Properties that have doubled up. So it's possible, right? Now, having said that, should you just be buying for appreciation? So you're buying for appreciation, you're buying wherever you're buying, and then you are losing money on a monthly basis. You're subsidizing. A lot of us, this is the school that we are in. So we buy properties, we are buying maybe a 2-bed, 1-bath, or maybe we're buying a 3-bed, 1-bath in a nice complex. And after a couple of years, we kind of like sell it. And we are going to be banking money on the appreciation. I am not for that. I'm like, nah, that's not cool, right? I'm of the view that when you buy a property, either you're buying it for cash flow or when you're buying it for appreciation, you need to be banking money either way. What do I mean by that? Right. I'm of the view that if you're buying for cash flowing property, if you're buying properties that cash flow, does it mean that you should sacrifice your appreciation? Well, by nature, or should I say, given the market, some properties are designed like that. So you're only going to have an appreciation or you're only going to have a cash flow in some markets. So you need to be checking out the markets, right? Wherever you're buying. Is it a market that is more heavily on the appreciation or more heavily on the cash flowing? Right, then we say that's great, okay? You understand the market, which is all good. Remember, we're talking about what's better to be buying off, for cash flowing or for appreciation. The other question that someone asked me is, TJ, how do you get rich with property? Do you buy for cash flow or do you buy for appreciation? I've got a different view, and my views is going to go something like this. After we have now explained why one would be buying for cash flowing, for them to be liquid all the time, for them to have money all the time available, right, in their pocket. So property is putting money in their pocket, which is good, and that's cash flowing, right? And we've spoken about some of those benefits. You know, you can replace income, so potentially you're running a small business, or potentially you're working, so you can replace that money because the properties are now giving you that. However, on the other side, appreciation, we have realized that most properties that we are buying for appreciation, you actually need to subsidize. You actually need to put in more money in there, and as the years come in, you will then be able to bank on your appreciation. However, let's assume that the same property that you've been buying for on appreciation, there's an argument I'd like to throw out, right? Let's assume that the same property that you bought for appreciation, then 5 to 10 years later, it doubles up, right? It doubles up. What it basically means that is, even though you were subsidizing little by little, right? It means that you're actually going to be banking money in 10 years because the property has doubled up. Oh, now there's some confusion now. So do we buy for cash flow or do we buy for appreciation, right? This is my view, right? My view is, how about if you could find that property, that gives you cash flow and that gives you appreciation? I'm getting excited. You can see there that I'm getting excited, right? How about you find a property that gives you appreciation and also that gives you cash flow, right? Both sides, best of both sides, eh? Best of both sides. I like that one. So we're taking in the appreciation part, because we know that our property can double up in maybe about 5 to 10 years, right? We can see where the market is going, right? We can see that. And then on the other side, in today's value, you're getting cash flow. Woo! I like that one. I like that one. Okay, let's talk about that now. Why would you want to do that instead of one or the other? I'm of the view, hey, it makes sense. You know, you're getting both sides. You're getting your cake, you're eating it, it's yours. You know, I like it, right? So let's talk about it. If you have a property that's appreciating in value year on year, right? And we're talking about 10 years, it's going to double up in pricing. Yes, there are properties like that. There's areas like that. Predominantly in South Africa, we have seen a lot of properties appreciate, like let's say in the Cape Town areas. It has always been ahead in terms of dominating in terms of appreciation. However, you have also gotten through other areas that I'm going to talk about that are in the inland that have started, sort of like small suburbs that have started appreciating, but this has been like a forced appreciation, right? And I'm trying to answer the question here, what's better to buy? Do you buy for cash flow or do you buy for appreciation? I'm of the view that I want to be in the middle. I want to buy a property that gives me both cash flow and that gives me appreciation. They're hard to find, but they're there, right? Why do I want to do that? Number one, if I buy a property where I am getting cash flow today, which means that I'm putting money today, so that means that my income statement is, right? It's growing, right? Good. If I buy it correctly, which then means that I potentially have some equity in that property, so I have banked that equity on my balance sheet, right? That's number two. Then number three, also what now happens is that as the area starts growing, right, year on year, that's the appreciation that we're talking about. Hopefully it does that at some point, right? And the appreciation now, number three, the equity that I bought, the money that I didn't work for, the equity, if you don't understand what equity is, let's Google it, or we'll talk about it in one of our other videos. Or the equity that I've bought now, it's no money, and in this case, that money is doubling without me doing anything. Whilst I'm sleeping, have you ever heard the statement, landlords makes money whilst they are sleeping? That's where it comes from, right? The capital, the equity that I bought initially, right, when I was buying in, they're always talking about you make your money when you're buying. That's the one scenario where you can actually be making money, because now that money that's sitting there is your equity. It's working double for you by doing nothing. Plus, the market also it's doing its own thing and your property is appreciating. So which means that the entire value of your property, including your equity that you bought, right, initially when you bought, also is doubling up. How amazing is that? So it means that 5 to 10 years from now, right, you could be banking on the same property, you're doubling it up. Now, some people would ask, so TJ, where do we find these properties? Where? Location, 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 location. Location is key, right? And this is going to shock a lot of people. I know that a lot of people are going to be shocked with this one. We all know Cape Town is the location to be in South Africa, but I want to talk to you guys about another area where a lot of us are actually like extremely scared to go into. But being scared of some of these areas as well, that's good. I'm not saying that, invest in areas where you're scared of investing, but some areas you need to understand what is happening, what is the long term, what's happening in there. And if you can partner up with other people that can go into that area, that understand that area, that know how to massage that area, I would say do that. So you've got the capital and you're not really let's look at Soweto right now, right? Soweto right now, how many properties they have been they're just like shooting up in value. That's number one. Look into areas like Berea, Yeoville, and look at what the reports are saying around appreciation in those areas. What has happened is that there are certain banks that have jumped on into that area, and what's happening is that continuously the properties there are being rejuvenated, or should I say they're being restored, right? Property by property, so which means that the value of the property, that's what they call forced appreciation. Forced appreciation, now the property, the values in that area, they're appreciating because something else is happening in the area, right? Now, if you had to get into that location when the market was down and you were buying when the market is down, and other investors are now coming in, and other investors are coming in there, they're making this neighborhood cleaner, safer, more friendly, and all of those nice things, and you are just holding on to your one property or to your portfolio that is in there, and others are doing the work for you 5-10 years later, and then boom, you want to sell. I generally don't like selling, but what you're doing is it's creating a big pocket of money on your balance sheet, which is called the equity. So your equity is growing by this appreciation. And for that reason, your portfolio is growing whilst you're sleeping. That is the only reason why I would want to stay in the middle and buy cash flowing properties that also appreciate. Because what also happens whilst all of this is happening in the background, I am banking money every month, cash flowing. And if this has been of value, I'm going to say to you that drop in some comments on here. Tell me what you liked about this video. If you've got some more questions, ask those questions in here, and I will surely be glad to answer them. Yeah, it is I, TJ. We'll check you out later. God bless. Cheers.